Snowflake, a titan in cloud data warehousing, has become a household name in the world of enterprise technology. Known for its innovative approach to storing and analyzing massive amounts of data, Snowflake has attracted a loyal customer base and significant attention from investors. The company's rapid ascent has made it a symbol of the new digital economy, where data is the most valuable asset. Recently, Snowflake revealed a financial forecast that sent shockwaves through Wall Street. Investors and analysts alike were caught off guard, as the company's outlook didn't quite match the sky-high expectations that had been set by its previous growth trajectory. While Snowflake's revenue continues to climb at an impressive rate, its profit margins are not keeping pace. This disconnect has become a focal point for industry watchers, highlighting the ongoing tension between the pursuit of rapid expansion and the need for short-term profitability, especially in the fiercely competitive AI era. The company's adjusted operating income margin is projected at just 7%, falling short of what many analysts had hoped for. This lower-than-expected margin has raised eyebrows and prompted a deeper look into Snowflake's spending habits. Much of the gap can be traced to Snowflake's aggressive investments in artificial intelligence and next-generation technology. The company is pouring resources into research, development, and talent acquisition, hoping to stay ahead of rivals in the race to build smarter, more powerful data tools. For investors, this creates a complex narrative. On one hand, Snowflake boasts strong sales growth and a rapidly expanding customer base, signaling robust demand for its services. On the other, the company's heavy investment in future technologies is putting significant pressure on current profits, making it harder to deliver the earnings that Wall Street craves. The race to lead in AI and data innovation demands massive upfront spending, with no guarantee of immediate returns. For Snowflake, the gamble is that these investments will eventually pay off, but the timeline remains uncertain. Snowflake's current situation serves as a case study in balancing patience, strategic vision, and the true cost of innovation. The company must carefully manage expectations while continuing to push the boundaries of what's possible in cloud data. Leadership is betting that today's bold investments in AI and infrastructure will secure a dominant, profitable future, one where Snowflake stands at the forefront of the data revolution. For the entire tech sector, Snowflake's journey is a powerful lesson in weighing the promise of tomorrow against the costs of today, and in understanding that true innovation often requires both vision and patience. Snowflake's profit squeeze is driven by its costly push into AI. The company is hiring top-tier data scientists and engineers, fueling high operational expenses. Building and training advanced AI models requires vast computing power, especially expensive GPUs, driving up infrastructure costs. These aren't one-time expenses. Ongoing model refinement and scaling keep costs high. Snowflake is also acquiring startups and licensing tech to accelerate its AI roadmap, adding to R&D spending. The strategy: pay a premium now to get AI products to market faster. It's a calculated gamble that new AI features will attract more customers and boost revenue over time. The company must spend now to secure its future position. The hope is that these investments will eventually justify the current margin pressure. Despite growing concerns about shrinking profit margins, Snowflake continues to capture the attention of the tech and investment world. The company finds itself at a pivotal moment, balancing the excitement of rapid expansion with the realities of rising costs. Snowflake's core business is thriving, with its data cloud platform serving as the backbone for thousands of organizations seeking to harness the power of their data. Product revenue is projected at an impressive $1.2 billion, beating Wall Street's expectations and reinforcing Snowflake's reputation as a leader in the data infrastructure space. Demand for its data cloud platform remains robust, as more companies migrate to the cloud and rely on Snowflake's solutions to manage, analyze, and secure their information in real time. However, this impressive revenue growth comes with a significant challenge: soaring costs, especially as Snowflake invests heavily in artificial intelligence development. Investors are increasingly anxious that the journey to successfully monetize new AI tools could take longer and require more capital than initially anticipated, putting pressure on near-term profitability. There's a growing fear that these high AI costs might not be temporary, but could instead become a permanent fixture in Snowflake's business model, squeezing margins for years to come. To stay ahead in one of technology's most competitive arenas, Snowflake is pouring resources into research and development, betting big on innovation to secure its future. The company's established business lines are providing the financial fuel needed to support this ambitious expansion into AI and advanced analytics. But until these AI-driven products start generating meaningful profits, the tension between impressive top-line growth and pressured margins will remain a central theme for Snowflake. Ultimately, this is the classic trade-off every innovative company faces: investing boldly for the future while still delivering strong results today. A delicate balancing act that will define Snowflake's next chapter. Snowflake's heavy investment is fueling a rapid expansion of its product suite, especially in the field of artificial intelligence. The company is not just keeping pace with the evolving tech landscape, it's actively shaping it, channeling resources into next-generation tools that promise to redefine how enterprises operate. The Snowflake Intelligence Platform is at the heart of this transformation. It empowers users to query data in plain English, removing technical barriers and democratizing analytics across organizations. Now, employees from any department can access insights and make data-driven decisions, regardless of their technical background. Cortex AI takes this a step further by embedding advanced language models directly into familiar SQL workflows. This seamless integration means that AI is no longer a specialized tool for data scientists alone. It's woven into the daily fabric of business operations, making intelligent automation accessible to everyone. The Gen 2 warehouse upgrade is a game-changer, doubling performance for compute-intensive AI tasks. This leap in capability makes it possible to run large-scale AI workloads efficiently, bringing down costs and making advanced analytics practical for businesses of all sizes. These innovations are driving swift adoption across industries. By mid-2024, AI workloads influenced nearly half of all new customer wins, signaling a major shift in enterprise priorities and a growing trust in Snowflake's AI-driven solutions. Over 6,100 accounts now use Snowflake's AI features every week, a clear sign of real, sustained enterprise demand. This widespread usage highlights the platform's growing role as a critical tool for modern businesses. The challenge ahead is significant, turning this impressive adoption into sustainable, profitable revenue streams. As competition intensifies, Snowflake must ensure its innovations translate into long-term financial success. Snowflake's bet is bold, that integrated, easy-to-use AI tools will become indispensable for modern enterprises, driving productivity and unlocking new business value at every level. Now, the company faces its next big test, proving that these powerful tools can deliver returns that not only justify the development costs, but also fuel the next wave of enterprise innovation. Snowflake's struggle mirrors a broader tech industry trend, the costly race to dominate AI. Giants like Google, Microsoft, and Amazon are pouring billions into AI R&D, infrastructure, and talent. This arms race is squeezing margins across the sector, as companies battle to offer the best AI platforms. Even SaaS firms are racing to embed AI features, driving up costs with uncertain short-term returns. Investors are now scrutinizing not just AI innovation, but the sustainability of business models. The narrative is shifting. It's no longer just about who has the best AI, but who can profit from it. Snowflake's situation is a microcosm of this industry-wide challenge. The pressure to fund the future without sacrificing present financial health is universal. Snowflake's margin woes are amplified by growing anxiety over AI stock valuations. In late 2025, Palantir's stock plunged 17% amid fears of an AI bubble, and even Nvidia saw volatility. Investors are questioning whether sky-high valuations are justified by real profits. Some AI companies trade at extreme multiples, putting pressure on them to deliver flawless growth. Any sign of slowing revenue or shrinking margins can trigger sharp sell-offs. Snowflake's weaker margin outlook landed at a sensitive moment, fueling skepticism. The market is demanding not just vision, but a credible path to profitable growth. Even leaders like Snowflake are struggling to turn AI innovation into immediate financial gains. The result, a more cautious, skeptical investment climate for AI. Despite margin pressures, analysts remain optimistic about core data infrastructure. Enterprise spending on platforms like Snowflake is seen as mission-critical, not discretionary. Clean, accessible data is essential for any credible AI strategy. Even in tough times, businesses prioritize investments in reliable data platforms. This explains Snowflake's steady revenue growth despite rising costs. Its core services solve fundamental business problems, making them resilient to budget cuts. Analysts distinguish between speculative AI spending and necessary data infrastructure. As enterprises mature in AI, Snowflake's central role is likely to pay off long-term. For business leaders, the lesson is clear. Build a solid data foundation before chasing AI trends. Prioritize clean, governed, accessible data as the basis for any AI initiative. Adopt a phased approach. Start with small, high-impact AI use cases to prove value. Align AI projects with clear business objectives, focusing on tangible outcomes. Avoid hype-driven spending. Invest where AI can solve real problems or create new revenue. Foster data literacy and continuous learning across the organization. Empower employees to use AI tools responsibly and effectively. A data-savvy workforce is key to unlocking the full potential of technology investments. Snowflake's financials illustrate the high-stakes gamble of tech's AI pivot. Its margin squeeze reflects a bold bet on becoming an indispensable AI platform. The payoff won't come in a single quarter, but over years as AI adoption matures. Investors must distinguish between short-term costs and long-term strategic value. The tech industry is shifting from growth at all costs to profitable, sustainable innovation. Companies must show how AI investments will lead to stronger business models. Balancing innovation with financial discipline will separate winners from losers. Snowflake's story is about the economics of building the future. Expensive, uncertain, but potentially transformative. For those who invest in the foundations, the rewards could be game-changing.